Good afternoon. So we have discussed certain sections between ATC to ATU, and we will continue to discuss some more sections in today's class and also do a numerical illustration to understand those sections. So yesterday's class we have done ATC, AT triple A, AT triple C, ATCCD, which has two clauses, clause 1A, in which the pension is contributed towards government scheme by the employer and employee, and ATCCD 1B, which includes voluntary contribution towards NPS or Atal Pension Yojana. So in today's class, we'll discuss ATCE and GG, and we'll also discuss all the sections which are meant for health and medical treatment. So these are the two segments which we would be focusing in today's class. Now, ATC has come in two segments here. If you look at ATC exists in promotion of investments and social security. ATC is also mentioned for certain expenses. The reason is simple, because when we discuss this, you know that ATC not just only promotes investments, insurance, but it also accommodates certain expenses incurred by the SSC. So what are these expenses? Expense number one, home loan principal repayment. So when you buy any loan, it has two components attached to it. One is the interest and one is the principal repayment. So what happens here is that in case of ATC, interest paid on home loan is not considered. Interest paid on home loan is not allowed as deduction under section ATC, but the amount paid towards the repayment of loan, the principal repayment of loan, is considered for deduction. Next is the expense incurred on property registration. So when we say property registration, again, this is for the house. Any other property is not considered here. Third, tuition fee paid to educate maximum of 2 children. So these are the expenses which are allowed as deduction under section 80C. Now, we also have expense that comes under 80E. So let's quickly go to section 80E. We'll see what is there on the offer in 80E. 80E, in order to make it a little simpler for you, E stands for education. So when we say 80E, 80E allows deduction for interest paid on education loan. Now, certain things which are important here is that the loan has to be taken for higher education, and the loan can be taken for self, spouse, or children, or any student of whom the individual is the legal guardian. Now, when we say higher education, it includes your graduation, post-graduation, and any studies which is done after post-graduation. So what if, let's say, you are in the final year and very soon most of you will be employed, you will start earning, and then you feel, okay, probably I should do some part-time work and I should also take a full-time MBA or some other master's program, and for which you take loan. So you're taking a loan, education loan for your own education. That is also allowed. Self is also allowed. Your parents taking for you, that is also allowed, but your parent can take the deduction claim under section 80. And in case after marriage you want your spouse also to study, continue, for whom you're taking a loan, so interest paid on education loan taken for spouse education is also permitted. Deduction can be availed only for 8 years, beginning from the repayment of the first year. And section 80 does not have any upper limit. So no matter what is the amount of interest you're paying, the entire amount of interest what you have paid on education loan can be claimed. So this is section 80E, interest on education loan taken for the higher education of self, spouse, and children. Now, in the last semester, you people have studied house rent allowance, popularly known as HRA. Now, HRA is given to employees to given the fact that rented houses are quite expensive, especially in metro cities and a city like Bangalore, the rent amount is quite huge. So as a salaried employee, most of your salary will go in paying rent itself. So in order to help the employee, the employer include house and rent allowance in the salary. That is to help the employee to meet the cost of accommodation. Now for employees, house rent allowance is not fully taxable. This is what you have studied in your previous semester. So house rent allowance is partly taxable under section 10 subsection 13A. So section 10 subsection 13A says least of the following is exempt. First point, 40% of salary, rent paid minus 10% of salary, actual HRA received. So taxable amount is actual HRA received minus the least of the above transactions. So it is partly taxable. So you see salaried employees are getting some sort of benefit and they're getting some sort of claim for getting HRA. But what about non-salaried employees? Let's say I'm a businessman, I have a small shop, I'm also paying rent. I also stay in rented house, but income tax department is not giving me any benefit. Whereas a salaried employee gets HRA, HRA is not fully taxable for him. He gets tax exemption, he gets tax benefit. Whereas I am a businessman, I'm also paying rent, but for the rent what I'm paying, I'm not getting any benefit. I'm not getting any deduction. So what happens here is income tax department has introduced section 80GG. Now 80GG is for those people who are not in the receipt of house rent allowance. So meaning to say this section cannot be used as a claim by those people who are getting HRA. So if you're getting HRA, you can't claim rent paid under 80GG. So one of the important conditions is that you should not be under the receipt of house rent allowance. You should not be getting house rent allowance. So in other words, salaried employees cannot claim this. So this is meant for non-salaried employees who are paying rent. In my example, I'm a businessman, I have a small shop, I'm paying rent. So I can also claim deduction for the rent what I'm paying under section 80GG. So 80GG allows you to deduct claim deduction for the towards the rent what you have paid for the accommodation, but the deduction is not flat, unfortunately. There are steps that needs to be followed, right? So when we say deduction, it is not flat. What do you mean by that? Let's say I'm paying a rent of 50 hours. So it doesn't mean that whatever rent I have paid that can be claimed as a deduction. So in order to calculate the deduction amount just the way we do in HRA by applying 3 steps, just need to look what is the amount of deduction allowed for the rent paid. We have to apply these provisions of the section 80GG. Now, what are these provisions? It primarily comprises of, as you can see here, there are 3 steps. Step number 1, rent paid minus 10% of adjusted GTI. Second step, government notified limit 5,000. I think in the book it is mentioned as 2,000, so I request you to change it to 5,000. 25% of the adjusted GTI. So once you calculate all these 3, what happens is the least of the following is exempt. The least of the following is exempt in this. Okay, so what we do here is we apply these provisions, and here the trick for you guys is to only learn how to calculate adjusted GTI, because the first step says rent paid minus 10% of adjusted GTI, and the last step says take 25% of the adjusted GTI. So how do we calculate adjusted GTI? The answer is adjusted GTI is calculated by applying this equation. So we have to remove all the deductions what you have claimed under section 80C to 80U except 80GG, and you have to also reduce, you have to also eliminate short-term capital gain and long-term capital gain. Okay, but nonetheless we will keep this little aside. I don't want to confuse you by explaining the concept of adjusted GTI. We will do a question if time permits on this, but exclusive question I meant. But for now, you just remember what is ATGG? ATGG provides deduction for the house rent paid. What is the condition? The condition is that you should not be a salaried employee. So only non-salaried employee claim deduction per section. And deduction is not flat. There's a procedure which involves applying 3 steps and taking the least of the 3 steps. Step number 1, rent paid minus 10% adjusted GTI. Step number 2, government notified limit of 5,000 per month or 60,000 per annum. Third, 20% of the adjusted GTI. So take the least of the 3. The least of the 3 is exempt. Okay, so these are the 3 sections that deals with expenditure or expenses, right? So section C, ATC, what are the expenses allowed here? Expense number 1, principal repayment of home loan. Expense number 2, property registration charges. Expense number 3, children tuition fee for maximum 2 children. ATE, interest on education loan of self, spouse or children or any other child for whom you are legal guardian. And there's no upper limit as such. You can claim any amount. Unlike ATC, there's a maximum limit of 1,50,000 here. And here there's no such limit. ATGG is deduction towards rent paid, provided you should not be a salaried employee. Okay, so these are some of the conditions. Now let's move on to all those sections that provides deduction towards health and medical treatment. So let's begin with ATD. Now, what's common between ATD and ATC is that both ATC also has insurance, whereas ATD is also insurance. But the difference is ATD here is the insurance premium paid towards medical or health insurance. Whereas in ATC, we have insurance premium paid towards life insurance premium. ATD is insurance premium towards medical or health insurance. There the life insurance premium can be paid for self, spouse and children, whereas here one more addition is there. ATD says you can claim deduction towards medical premium paid for the policy of self, spouse, children and parents. So parents is also included here. Now, what is the quantum of claim that is allowed under section ATD? So in case if both the assessee and parents both are non-senior citizens, then the maximum amount of claim that can be availed under section ATD for the premium paid towards medical or health insurance is maximum 25,000. This is for self, spouse and children, and for parents additional 25,000. So maximum you can claim 50,000. But what if the parents are above 60? The assessee is within 60, but parents are above 60. In that case, the amount is doubled for parents. And in case if assessee is also above 50, parents are also above 50, then again the amount changes. So maximum 1 lakh. In addition to premium paid towards medical or health insurance, the assessee can also claim additional 5,000 rupees for preventive health checkup. Now, some families do have a good practice of doing a family checkup or a master health checkup for all the members of the family, for which you have to pay again money. Diagnostic tests will be done, blood tests, scans, reports. So income tax department says, okay, in case if you have also paid any expenses towards preventive health checkup, claim that also, but maximum you can claim only 5,000. So now let's say in my case, I do have health insurance for my family and for my parents. For myself, my spouse and my children, I pay 23,000, and for my mother, I pay 22,000. So what is the amount of claim I can make? The answer is full amount, because for self, spouse and children, I'm paying 23,000, which is within the limit. And for my mom, I am paying 22,000, which is also within the limit. So 23 plus 22, I can claim 45,000. Okay, but let's say I have a premium for self, spouse and children, and the premium amount is very high, 50,000. In that case, I can't claim 50,000. I can claim only max 25,000. So that's the reason the last line says actual premium paid or this notified limit, whichever is less, can be claimed. Simple. Okay, so this is section 80D for you, which says you can claim amount of premium what you have paid towards medical or health insurance policy of self, spouse, children or parents. And these are the notified amounts. And in addition to this, you also can claim 5,000 towards preventive health checkup. Now next, move on to 80DD. Now, to make things simple, this entire section I can summarize using this section itself. DD represents what? DD means what? DD does not have any expansion, but to make it easy for you to understand, I have given the expansion, and this expansion explains what this section is all about. DD stands for disabled dependent. So section 80DD says you can claim expenses which you have incurred for rehabilitation of disabled dependent relative. So somebody is physically challenged, right? Somebody severely disabled. I mean, life becomes quite challenging, and at times you may have to do rehabilitation by providing them necessary gear so that they can walk, they can move around. That might be a one-off expenses, but income tax department is kind enough to give permanent deduction. What it means is, let us say there is an SSC called Mr. X. Okay. Now he has his brother who is unfortunately physically challenged, his brother. So his brother is dependent on him because he's physically challenged. So he can't do many things. He can't go to work and all these issues are there. So what SSC does initially, SSC gives some expenses towards treatment if treatment is required. But in most of the cases, once a person loses his limb, right, what happens? You have to just give him the care, maybe a wheelchair or right necessary equipment so that he can move around. That might be a one-off expenses. But what income tax department is saying, okay, if you have a disabled dependent relative who's dependent on you, whether you're spending money on his rehabilitation or not, or whether you have spent little or more, does not matter. You can claim flat deduction year after year after year. So let's say in our case, Mr. X, who's an SSC who has a brother who is physically challenged, in the first year when he meets with an accident and loses his limb, in that year he has spent some 2 lakh rupees. Okay. Next year he buys a wheelchair for him, for which he has just spent 15,000. After which, third year onwards, he's not spending anything on him at all. But income tax department says whether you have spent money or not, as far as you have a disabled dependent relative, you can claim flat deduction. How much is this deduction you can claim? The answer is if the disability is between 40 but not more than 80, the amount is 75,000. But if the severity of disability is more than 80%, then the amount of deduction what the SSC can claim is 1,25,000. Now, who decides what is the severity of disability? The answer is it is decided by the concerned doctor, and you have to give proof to the income tax department. The severity of disability is decided by the doctor, not by the SSC. So what here means, in my example, I said the SSC would have spent some 50,000 in the first year of accident when his brother became physically challenged. In the second year, he has just spent 15,000 rupees for getting a wheelchair. Third year onwards, he's not spending anything, but still he can claim flat deduction. In the first year also, let's say if it is a severe disability, he can claim 1,25,000. Second year, even though he just spent 15,000 for his wheelchair, still he can claim 1,25,000. Third year, he did not spend anything at all. Still he can claim 1,25,000. So this 1,25,000 is a flat deduction which the SSC assessee can claim whether he is incurring any expense or not. Doesn't matter. He can continue to claim flat deduction. So that's how it's been. Okay. So section 80 bottom rights deductions in related. Okay. So that is what 80DD is all about. Now, with similar 80DD and 80U is almost the same except for one difference. Now, what is the difference between 80DD and 80U? The difference in 80DD, assist is related or physically challenged or handicapped. Whereas in 80U, assessee himself is physically challenged. 80U, right? The name, the alphabet also says U. That means assessee. Who is physically challenged? Assessee. So 80DD and 80U, the provisions are same, except the difference is that 80DD assessee's relative is disabled, whereas in 80DD, assessee himself or herself is disabled. Otherwise, the provisions are same. Okay, so remember that. Then you have 80DD. 80DDB says, if you have incurred any expense for the treatment of specified diseases of self or dependent relatives, you can claim that as an expenditure. Now, what are the diseases for which you can claim deduction because you have incurred expenditure? Those diseases are also given under Rule 11DD. So these are the diseases. So in case if the assessee or his dependent relatives have any of these diseases, and if the assessee has incurred any expense for giving medical treatment of these diseases, then the assessee can claim expenditure. What is the expenditure he can claim? 40,000 if it is a non-senior citizen. And in case of senior citizen and super senior citizen, the assessee can claim 1 lakh. Now let's say assessee, unfortunately, assessee's father or assessee's mother or assessee's some other relative has chronic kidney failure, and assessee is spending all the money on kidney transplant or whether it is dialysis. So whatever the amount the assessee has spent for the treatment of self or dependent relatives, that amount he can claim as expenditure under section 80DD, but the maximum threshold here is for non-senior citizens 40, for senior citizens 1 lakh. So this is your sections that is specifically meant for treatment of health and medical care, right? So 80DD, health insurance or medical insurance premium paid for the policy of self, spouse, children and parents. Self, spouse and children and parents both are non-senior citizens, 25,000 plus 25,000. If anybody is senior, then from 25 it will become 50. And in addition to this, preventive healthcare checkup, maximum 5,000 is given. 80DD, assesses dependent is disabled, for which he can claim either 75,000 or 1,25,000, depending on the severity of disability. And in case of 80U, assessee himself or herself is disabled, whereas the other provisions are more or less the same. Okay, now what about 80DDB? 80DDB is the expenditure incurred for medical treatment of certain notified diseases, and this expenditure can be for self or dependent relatives. So this is 80DDB. So let's do a quick question now. I'll just share the question with you people. And meanwhile, if you have any doubts on what we have discussed so far, you can go ahead and ask. Any questions on what we have discussed? Okay. So we will be doing a question now, which is from the first chapter, income from profession. So this will be kind of a revision for you also, because here we are not just calculating income from profession. As you can see here, we have to also calculate total income as well as tax liability. So there are, it's like a comprehensive question in which you have to first calculate income from profession, then you have to calculate gross total income, then you have to calculate total income, then you have to calculate tax liability. So it has everything. It has complete concepts what we have been discussing in this semester. So just go through this. Okay, so you guys know how to calculate income from profession. You have already learned this. So it'll be a quick recap for you. So first what we have to do is we have to record professional incomes. Let's do it one by one. So let's look at the incomes. Also keep a watch on the adjustments. So first is consultation fees, which is 75,000. So let's record consultation fees. 75,000. Next, visiting fees 62,500. Third, interest on fixed deposit is not taxable under the head income from profession. It is taxable under the head other sources, so we don't take this. Simple. Short-term capital gain on sale of X-ray machine. Let's use the word taxable. Short-term capital gain on X-ray machine. So this is also not taxable under the head other sources. Sorry, profession. It is taxable under the head capital gain. So we don't take this in this head of income. Gifts from patient, yes, we have to take. So let's take gifts from patients, 15,000 rupees. Next you have Taxable income from house property, again, we don't take this in profession. Home loan taken from bank. First of all, loan is not an income. Second, this is again home loan, so nothing to do. So we don't take any kind of loan as an income. Loan is not an income. Loan is a liability, so we don't take. Next is which is yes, a part of professional income, and the amount is 90,000 rupees. Next, you have sale of medicines, which is again a professional income, and the amount is 32,500. Rent from subletting as it is under other sources. So let's go to admit. Say cash gift 1,500 received from a patient is not recorded. So cash gift not recorded. Let's record now. Amount is 2,500. So all this are the incomes. There's one more income here. Fourth point. He also works as a part-time employee for a medical college. From this, he has earned salary of 2 lakhs. So he is it he or she? Some confusion. She actually. So she is also a professor or a part-time employee in a medical college from which she has earned salary income. So the word salary is clearly used. So we can't treat this as an income from profession. So we can't take it. Okay. So this will give you the total. So total all the professional receipts. One of you can total this and message me on chat box. Next is let's record the professional expenses one by one now. So first is salary to staff. It is 36,000. Next is purchase of medicines. Okay, it's fine now. So let's continue with the question. Purchase of medicine. Purchase of medicine is 18,000. Next is professional books depreciation on professional books at 100% amount, which is 10,000. So this will give you the same amount. Next, you have purchase of car, which is again a capital expenditure, but you can claim depreciation on value of the car is 2,40,000. Into rate of depreciation, the rate of depreciation on car is 15%. 15%. Further, we have to multiply this with the proportion of usage. So 25% of the car is used for personal use, and 75% is used for professional, and therefore depreciation or any other car expense will be allowed in the proportion of usage which is meant for profession. 2,40,000 into depreciation amount, which is 15,000 of take. So this comes. Next comes car expense. Again, car expense will be allowed in the proportion of usage towards profession, 75%. So 25,000 into 75%. So this will. Next, we have computer purchase. Now, computer is also. So we need to charge depreciation. Now, what is the rate of depreciation which I have given you in the study material? This seems to be the old rate. What is the new one? Same thing. So it will be 40%. So the value of computer is 50,000. Into 40%. Next. Contribution towards SBI pension scheme. This has nothing to do with profession. Also a capital expenditure. So we had income tax. Income tax is a direct tax. All direct taxes are inadmissible, so we don't take it. Life insurance premium, also nothing to do with. So this is also inadmissible, so we don't take this as well. Next, we have home loan repayment. Now this also has question, so we don't take this also. Municipal rent of house property, nothing to do with this. Interest on education loan of son, this also nothing to do with profession. Health insurance premium has also nothing to do profession. So don't get confused saying that, okay, since it's a doctor, so health insurance has to do something. No. Health insurance premium is a personal expense, right? It's not a professional expense, so we don't take this also. So is there any expenses which we have missed out in the adjustment? The answer is no. We have incorporated all the expenses. All the expenses. So anybody who has got the total of all the incomes? Sorry, can you repeat?
2,77,500.
Okay, send me in the message box. I have some connectivity issues here. Not able to hear you. I'll just check the message. Just okay. So 2,77,500. So please also do total expenses. Final answer.
One lakh 26,000.
Okay, let's go for the calculation of GTI now. So we'll use table with two amount columns. First, um, salary. So income from salary is there in this question, as you can see here. He is working as a part-time teacher, lecturer in a medical college, and from this he has earned salary income of rupees 2 lakhs. 2 lakhs we will write down here. Property there in the question? The answer is yes. Here it is. Income from house property, 48,000. Next you have income from capital gain. Income from there is one transaction, as you can see here. Short-term capital gain from sale of X-ray machine. He has earned 20,000 rupees. Next is income from okay, I think we have forgotten the most important one, income from profession. So we'll take that here. So profit and gains from business and profession. So income from profession, which is 1,51,500. Income from other sources. Income from other sources. What are the income from other sources? The first one is income from FD, interest on bank fixed deposit. He has earned 10,000. Anything else? From other sources. No, there's only one. That is interest on fixed deposit. So probably write down here itself instead of. Okay, so that's it. We are done with all the heads of income. Let's quickly recheck. Have we missed out on anything? No, that's it. We have incorporated all the incomes. No, we have missed out. We have missed out on income from subletting, okay, which comes under other sources. Let's record that. Come from letting here, income from subletting 20,000. So total income from other sources is 20,000. So this will become the gross total income. So two lakhs plus 48,000 plus 500 gains. So next is deductions. Chapter 6. One. Let's apply. So deductions. Contribution to LIC pension scheme. So this is a deduction under which section? 80C. Not 80C. It is 80C. Amount 25,000. Next. Life insurance premium paid. Section 80C. Sum assured is 5 lakhs. Of 5 lakhs. Or actual premium paid, whichever is less. So 50,000 or 10,000, whichever is less. 10,000 is less. Next, home loan repayment. Home loan repayment is also a deduction which gets qualified under section 80. Repayment of home loan. Principal repayment of home loan is 35,000. Next, this is done. Next is you have to ensure that all 80C, 80CCC, 80CCD, 1B put together should not exceed 1,50,000. So obviously it is less than 1,50,000, so we don't have any concern. Interest on education loan of son. So section 80, interest on son's education loan is also there. So first let's total this 25 plus 10, 35, 35 plus 35, 70,000. So this is together. Next home loan is 7,500. Deduction the SSC is eligible here? Yes. Health insurance premium. So section less than the threshold limit of 25,000. Any other deduction which we have missed out on? Let's quickly check. So health insurance premium done. That's it. So next. Can you find out the total of all the deductions? So 3 lakh 52,000 final answer. Now the last step is to compute the tax liability. Age of the assessee is given in the question 24. So age is given by the so we'll follow the same format which we have been following for the computation of tax. We recently did a question, so I'm just trying to recall that file. Assessment of individual question number 1. Yeah, this is the one. So here the total taxable income of the assessee is 3,52,000. So she is eligible for a so these are the tax rates in case of individuals. Okay, voice is breaking. I think I'm running on mobile data. Unfortunately, my broadband is down. So let me try connecting to Okay, so the sum issues, so you have so up to 2,50,000, there's no tax. Tax at 5,000. At 5,000. So that's the final answer.